NVIDIA. I'm glad that Rick brought up the performance that we've seen year to date when we think in particular about the Mag 7. Although there's been some recovery this week, NVIDIA still had some difficult performance year to date. What's your view here, Joe?
Yeah, so NVIDIA is doing a lot better than Google, a lot better than some of the other Mag 7 too recently. I think the AI trade is still on. As long as the economy stays cooking, as long as we stay out of a recession, which I think it looks like that is the case, I think people will still be buying these chips, and we're not going back. We're going to continue to push toward this productivity, continue to push forward on this innovation, and the innovation is through these high-powered chips, and NVIDIA just has the best, and they are doing the best in that fashion. So yes, this data center world, this world of high-powered computing is not ending, and NVIDIA is still going to be leading the way. So it's kind of a bet on the economy. The economy stays strong. NVIDIA is going to do just fine every time they have earnings, in spite of the fact that they have extremely high, lofty expectations. NVIDIA still comes out on top of those expectations. I see no reason for that to stop.
They have, but what's interesting is in terms of how it's traded more recently, they'll do better, they'll do a beat and a raise, and the stock will actually get hit in recent quarters. I don't remember how many quarters in a row that's been recently, but before that was obviously a different story, Joe. But it has made quite the recovery recently. Rick, what are you paying attention to in the chart for NVIDIA?
Yeah, so this one looks a bit stronger than Google by several respects, but kind of a similar trajectory overall. We had our high point, and then we had our severe decline bottoming out from the tariff news. Now we have already progressed beyond our moving averages. Similar confluence, similar sideways move. Now you can see our yellow 21-day has crossed above its slower moving counterparts, which is a good sign, visual sign at least, of trend change. Maybe not the greatest trading indicator to use it as a signal, but it's easy to tell that things are improving just based on looking at that. Now we can see RSI overbought, maybe backing off a little bit with today's modest decline here, but still in the overbought area, still typically regarded as a sign of strength here. We can also see we've crossed above some significant horizontal areas. The highs we established here, 122, and then also 130, our dark green line here. Old high point, and then lows, 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 and then it came back as support and resistance during this whole period as well. So now this is a downside area to watch. Next set of highs come in near 142 at our red line here. We've broken through our downward sloping trend line with a pretty strong push to the upside here. So volume profile shows us that we're nearing the relatively high volume area right around here, 138. Lines up very closely with the +1 standard deviation channel. This could be a place to look for a potential slowdown here, but like our last chart, big confluence of potential support down here around 115 to 118 or so.
Okay, and Joe, any final thoughts you want to leave us with on NVIDIA or any of the other picks on your list, Archer or Alphabet, Google?
Yeah, final thought on NVIDIA, maybe all of them are just kind of going to take a strong economy. NVIDIA I have a lot more conviction on in the short term.
One of the biggest corporations in the world now is NVIDIA. Regarding AI stocks, NVIDIA is at the top of the list. For the AI business, the company manufactures the most sought-after component, specialized GPUs, or graphics processing units, which enable the deployment and training of intricate artificial models. One common indicator indicates that NVIDIA shares are remarkably cheap, even though the company has a market capitalization of almost $3 trillion. Cloud computing infrastructure powers almost all AI applications used worldwide today, whether they are consumer products like ChatGPT or neural networks utilized by a select few businesses. Otherwise, AI developers would have to invest a significant amount of money and time in purchasing their own infrastructure. And when it came time to expand the business, those developers would have to purchase even more infrastructure, which would make the process expensive and time-consuming. Cloud infrastructure enables dynamic scaling through the use of rented servers that can function anywhere. What do all those servers run on? Specialized chips called GPUs. Interestingly, NVIDIA holds about 90% of the market for data center GPUs, which is a testament to its early investment and strategic vision. The company's GPUs are so popular that the most recent generation was sold out for a full year at one point, and its gross margins are significantly higher than those of rivals like Advanced Micro Devices and Intel. As the AI industry takes off, NVIDIA is sitting on a dominant market position. The United Nations, for example, estimates that the AI market will grow from $189 billion in 2023 to nearly $5 trillion by 2033. While shares of NVIDIA appear very expensive based on some metrics, because of all this potential growth baked into today's stock price, one important metric shows that shares are still surprisingly cheap. You would think that a high-quality stock with such an exciting long-term growth trajectory would be priced at a steep discount, but NVIDIA is priced at a healthy premium to the market. NVIDIA shares are trading at a premium of almost 44 times earnings, while the S&P 500 is trading at 28 times earnings. But its earnings growth is significantly higher than that of the average S&P 500 company. NVIDIA is trading at slightly under 30 times earnings, which is a far more acceptable price to pay than the S&P 500, which is trading at 21 times forward earnings in the next 12 months of anticipated profit growth. Based on today's purchase price, NVIDIA shares may be valued relatively similarly to the S&P 500 in a few years. For such a successful business, which is expected to grow by heavy double digits for many, many years to come, it is an amazing deal. Patience is the key here. In order for long-term growth to justify that initial premium, investors must be prepared to wait. An iconic illustration of how patient investors might find an alluring deal on blue-chip companies is NVIDIA. Time is the only unique component you'll require. However, given the company's substantial market position and the robust expansion of its underlying market, this is a stock that may reward patience in the years to come. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Let's take a look at Magnificent 7 stocks. Still moving to the upside today after rallying this week along with the broader market recovery. NVIDIA is back in positive territory for the year with Meta and Microsoft hovering around the flat line year to date. Joining us now, Kimberly Forrest, Boca Capital Partners founder and chief investment officer. Kimberly, always great to have you on here. To what extent do you think this most recent rally is a signal of a comeback for tech for the year?
Sure. Well, it's really hard to divorce yourself from, the thing that's growing, and that would be tech. There are parts of the market that have languished, but I think everybody acknowledges that AI is a thing, and the companies that count, which are those in the Magnificent Seven, are not only benefiting from it, NVIDIA, I'm talking to you, but also driving it, and that would be Microsoft, Amazon, Meta, and Google. So I think because AI is still in the forefront of most growth-oriented and certainly momentum-oriented investors, that's why they love them.
And so, as we're still waiting for, of course, the poster child of AI in the semiconductor trade and really the most magnificent member of the Mag 7, NVIDIA, to report earnings, what can they say that either further solidifies the rally at least back to break even over the course of the year, especially knowing that NVIDIA and Apple were two of the larger names that had actually led some of the declines and essentially been predecessors to the market decline more broadly that we had seen at the start of 2025?
Sure. Well, I think the AI trade is always in question because a lot of people have tremendous amounts of hopes on what it can actually do. And if you let me, I'm probably going to be a little bit of a wet blanket on that because of Meta's latest announcement that Behemoth would not roll out for unspecified reasons, right? They just said, well, it's not ready. We're going to delay it, a couple months, blah, blah, blah. But I think that AI really is a force for the future, and people really want exposure to that. So, why not? Why not pile into the companies that could benefit from it, are making it, and actually get paid for it? Oh, back to NVIDIA. Sorry, I got lost there. NVIDIA needs to say that its chips are in demand and that there are no other competitors currently. Because everybody, if you make a semi, wants to replace NVIDIA as the preferred chip. So those are the two comforting messages that NVIDIA has to say.
Following a series of long-term sales agreements during President Donald Trump's trip to the Middle East, which came after a tariff detente between the US and China and an earnings season that revealed NVIDIA's largest clients are still well ahead of schedule on capital spending related to artificial intelligence infrastructure, where the chipmaker dominates. The stock is on track for its best month in a year. After several months in the wilderness, NVIDIA shares have found their way back as trade tensions with China ease, new chip buyers emerge, and doubts about big tech spending fade. This season demonstrated that the hyperscalers are still raising their projected expenditures, with NVIDIA continuing to be the leading recipient of that capital expenditure. I don't know why they expect the party to stop, but everyone wants to get off the train before it does, said Robert Ruggiero, Chief Investment Officer of Brave Eagle Wealth Management. The stock has now risen 43% from an April low, and is less than 6% from where it closed on January 24th, the day before the launch of DeepSeek's R1 model sparked fears that cheaper AI development would hurt sales, sending NVIDIA and other technology stocks plummeting. Since the beginning of the month, NVIDIA has surpassed both its 200-day and 50-day moving averages, which are encouraging technical indicators for the company's short and long-term momentum. Since its April low, the rally has increased its market capitalization by around $1 trillion, putting it ahead of Apple Inc. With $3.29 trillion, NVIDIA is currently the second largest stock in the world, behind Microsoft Corp., which has $3.37 trillion. NVIDIA's most recent surge represents a sharp recovery from the stock's largest decline since 2022. Amid worries that big tech's chip buying spree was about to slow down and that trade tensions between the US and China threatened a crucial market, the chipmaker's shares had dropped 37% from their January peak at their lowest point last month. Tech giants increased the stakes rather than retreating. On the strength of demand, tailwinds connected to AI, Meta Platforms increased its capital expenditure plan, while Microsoft and Alphabet promised to spend even more the next year. According to the average of analyst forecasts compiled by Bloomberg, capital expenditures for the four companies, including Amazon.com, are expected to reach almost $330 billion in 2026, up 6% from estimated spending this year. Wall Street has been buoyed by fresh business opportunities in the Middle East, even though there is still a chance that U.S. trade policy would change negatively with relation to China. On Wednesday, Bank of America reaffirmed its buy recommendation for NVIDIA and increased its price objective from $150 to $160. According to analyst Vivek Arya, the Saudi Arabian infrastructure project commitments announced this week may bring in up to $5 billion a year for NVIDIA and rival Advanced Micro Devices Inc. and help make up for missed revenues caused by China's ban on chip exports. With 87% of the analysts Bloomberg tracks recommending a buy and the company trading 20% below the average analyst price target, Wall Street is still nearly unanimously favorable on the stock. It has the second highest predicted return among the Magnificent Seven stocks, after Alphabet. Although NVIDIA's share price has recovered from being the lowest in relation to projected earnings since 2019, it is still below the long-term average. According to Bloomberg Intelligence, NVIDIA is expected to grow revenue 54% in its 2026 fiscal year, which ends at the end of January. The company is scheduled to report its next batch of earnings after the market close on May 28th. Based on statistics provided by Bloomberg, the shares are currently priced at 28 times, compared to an average of around 35 times over the last 10 years, after briefly trading below 20 times earnings projected over the next 12 months. The S&P 500 index carries a multiple of 21.6. Owning the kind of growth that NVIDIA provides typically comes at a price, but the valuation isn't far from multi-year lows or the market as a whole, which shows how appealing the investment profile is, according to Andre Bakos, president of Ingenium Analytics. The stock's technical strength, valuation, and growth potential are all now working in NVIDIA's favor, particularly with the addition of additional Middle Eastern markets. That just serves to highlight how difficult it is to reverse a trend when the underlying principles are so strong. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
I know that you have a particular interest in LLMs and Meta's behemoth, but I want to tie it back to NVIDIA, to the point that you're making here, because if we as investors can't really get clarity on who's going to have the best LLM, what the timelines are going to look like, the argument I've heard from sources like Dan Ives is you buy what's juicing the LLMs regardless, aka NVIDIA. How do you rate that framework of thinking for investors?
I think that's going to work right up to the point where it doesn't, because what this is a momentum investing play, right? And I love momentum investing when it's working. But here's what the problem is. The top buyers of NVIDIA are playing this game that they are going to continue investing at the same rate their competition is, because the minute one of them takes their foot off the gas pedal, they're going to become irrelevant. Not just lose first place, we're talking irrelevancy, right? So that's why Dan's argument works. Now, I'm not saying they would collude, but they might get to a point where they say, oh, gee, the promise of truly autonomous learning, where we don't have to have any human governors on there, they just know the truth. If that can be formulated or, programmed, we'll say, maybe this is a winner in perpetuity for as long as I'm going to be in this business, right? But I don't think that's the case. So I think there's going to be bumps along the way where it will call for lower investment. And by lower investment, that you don't need every last NVIDIA chip that's coming off the line.
What do you believe about Magnificent 7 performance relative to the rest of the 493 in the S&P in your outlook?
Well, I think it's merited. They're showing growth. I am a growth at a reasonable price investor, so I don't necessarily own a lot of the Magnificent 7. But I do know this: Wall Street over time rewards growth. And these companies have proven year after year that they have some kind of magic formula to get whatever customers they need. And it's not direct in many of their cases, right? Because Google and Meta, the users don't pay for it, the advertisers do. But as long as you can get paying customers to keep paying, they're going to win.
On Tuesday, President Donald Trump brought a prominent group of American tech CEOs, including Jensen Huang of NVIDIA, to an investment conference in Saudi Arabia. Together, Trump and Saudi Crown Prince Mohammed bin Salman unveiled a $600 billion investment program that included significant alliances with NVIDIA Corp for AI infrastructure. NVIDIA and other American companies will be able to ship processors to Saudi Arabia and the United Arab Emirates after the Trump administration revealed during the visit that it was lifting limitations on the sale of cutting-edge AI chips from the Biden administration. NVIDIA declared that it has joined forces with a number of prominent Saudi institutions to work together on AI projects. Restrictions on the shipment of cutting-edge semiconductor chips to Saudi Arabia were put in place by the Biden administration, mainly because of worries about possible threats to American national security and the potential for these chips to be diverted to China. Throughout the next 5 years, Humane, a division of Saudi Arabia's public investment fund devoted to artificial intelligence, plans to build AI factories all throughout the kingdom using hundreds of thousands of NVIDIA's most cutting-edge GPUs, with a combined capacity of up to 500 megawatts. An 18,000-unit NVIDIA GB300 Grace Blackwell AI supercomputer, coupled with NVIDIA InfiniBand networking for fast connectivity, is being deployed as part of the rollout's initial phase. Humane will also present the first NVIDIA Omniverse cloud platform in Saudi Arabia, which will allow digital twins to be used for testing and simulating physical AI systems. According to Huang, AI is a necessary component of any country's infrastructure, much like electricity and the internet. We are constructing AI infrastructure with Humane to help Saudi Arabian citizens and businesses achieve the kingdom's ambitious agenda. Furthermore, in order to create a sovereign AI factory and promote smart city initiatives, NVIDIA and the Saudi Data and AI Authority will install up to 5,000 Blackwell GPUs. In order to give government and university scientists and engineers the abilities they need to create and use models for both physical and agentic AI, the alliance will also train them. Additionally, it was revealed that Aramco Digital will create a center of excellence for engineering and robotics with NVIDIA technology, develop AI enterprise platforms, collaborate with NVIDIA's startup ecosystem, and build AI computing infrastructure. Vivek Arya, An analyst at Bank of America Securities projected that the Humane deals will be worth between $2 billion and $3 billion a year, probably beginning in 2025 for a total of $15 billion to $20 billion over a number of years. The analyst also mentioned sovereign AI as a possible remedy for the U.S. data centers' restricted power capacity and export prohibitions from China. Bank of America increased its price target for the Saudi investments from $150 to $160 while keeping its buy rating on NVIDIA shares. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Kev, you joined me here on a day option expiration from a place, the options exchange, that I'm sure brings back some fond memories. Now, it's not what it used to be, but what should traders think about here on this expiration day?
Well, Alex, we've had a pretty epic week in these markets, right? We've had big rallies in futures. I'm looking at, think about this, Alex. NVIDIA closed last Friday at 116.65. It's up 18, almost $19 in a week. This stock has, there's big moves in these markets. So what's the thing that traders should look for today? You've got an up opening. You're waiting on more headlines. President Trump is winding up his trip to the Middle East. So maybe some of the headlines there are going to dissipate. They've been mostly positive. You've got talks between Ukraine and Russia. Looks like they just broke off a few minutes ago. That could be another story. But Alex, more than anything else, fatigue could be setting into some of these markets. This has been a rip-roaring rally from, for the last couple of weeks, and you have to look for a little bit of fatigue. You're starting to get overbought in some relative strength numbers. So what I'm looking for on a Friday as we get to expiration to see if there's any real inertia still in this market. If you look to next week, not a lot of top-tier economic data to look at. Earnings focused on the U.S. consumer, Home Depot and Lowe's, TJX, Target, things like that. Not a lot of top-tier names there other than the names I just mentioned. So what's the next inertia, the next impetus for this market? It could cause traders to pause here a little bit or take some chips off the table. It's been quite the comeback, as you know.
Yeah, no, I think point well taken. Now, the one thing I would say, Kevin, I want to get your thoughts on this. We had this discussion with Liz Ann Saunders yesterday on Market on Close. If you were to look back to Wednesday was a day that was led by a very isolated part of the market. It was one we knew well. The semiconductor AI trade was out in front. Everything else was struggling. We closed green. Yesterday, that part of the market was struggling, but everything else came to the rescue, and we still closed green. Are we just in a market environment at the moment where we talk about how things kind of flip back and forth, where maybe a month ago, no matter what the headline was, it was negative? Seemingly now, everything's just a positive as this market, as you've talked about, has a bit of inertia to the upside.
Yeah, the headlines are so important, Alex, how they drive sentiment. Now, you are going to get a consumer sentiment data coming out here at 9 o'clock Chicago time, 10 o'clock Eastern, which that's been the big divide in this market. It's the hard data versus the soft or sentiment data. And the expectations are, despite CPI coming down, despite PPI coming down, the inflation numbers looking better, they're looking for inflation expectations to go higher. Why? It's sentiment data. It's softer data. It's not actual numbers. It's what people might think. So watch for consumer sentiment and see how the market pivots off of that number, Alex. But watching where we are, how far we've come back, is this shorts chasing? What is this? Where are we now in this market? It's fascinating to figure out. It's getting, a bit stretched. Things are going to become more, I think, two-sided as we had nothing short of a remarkable comeback in these markets, and frankly, by most prognosticators, unexpected. There's a lot of people like with neck braces on from the whiplash of these markets going down, and then when no one thought they could come up, all of a sudden, news on China, news on a UK trade deal, and we've got a big knee-jerk reaction rally. Does that continue? I don't know. I think it may need more headlines. If those start to slow down, fatigue could hit this market. That's what I'm really watching for, Alex.
Yeah, Kevin, maybe that's something, too, that maybe we should just start to get used to, which is in the modern market, perhaps drawdowns, as vicious as they are met with just as vicious and violent of rallies when they end. I mean, it's almost a mirror image, although much more violent and much deeper of a sell-off and rally that we saw in August. It looked like the market was falling apart in early August of last year. Not really any catalyst. Yeah, we had a catalyst to point to this time, and the move was a little bit bigger. But both, when they stopped, boy, did they stop, as we had some vicious, vicious rallies. Now, this leads me to my final question here, Kev, for you as we, kind of close out this week and set up the day. You mentioned NVIDIA. NVIDIA looking to open up about $2, 136 or so. And there's this weird phenomenon in markets where at $90 a share, when things were unraveling, you didn't want anything to do with NVIDIA. Maybe you may have, as someone who's been doing this for a long time, but the general investor wants nothing to do with it. And then suddenly, a good 50% rally later, it's the most attractive thing, chasing it on the way up. What is your message to the investor who's battling those feelings, even if they know it's maybe in hindsight not the best way to go about it? They can't help it because of the FOMO feelings that they get.
I'm not going to fall back to the knee-jerk reaction of buy low and sell high, Alex, but markets correct. And when markets correct, there's buying opportunities of good quality companies. And if you remember, during this global sell-off that really encompassed every single sector in the S&P 500, the news on NVIDIA never wavered. Jensen Huang was on the tape saying their business hasn't backed off. Demand for their products hadn't backed off. So it's the opinion news cycle, and then it's the actual news cycle. And discerning between the two is what helps you make good decisions versus bad. So, Alex, good quality companies in a sell-off. Right now you're going to look at stocks and everything has rallied, right? Every single stock has rallied, but some have rallied more than others. And that's the thing to pay attention to in a sell-off. What name, when the market recovers, is going to come back the most? That's what you're seeing in NVIDIA.
Yeah, I mean, said another way, Kevin, what I'm hearing is it's always a calculation of risk and reward. And right now, when you look at some of these names, not to say that there can't be a lot more reward, but there's certainly less available than there was. And inherently, there's more risk as these prices have come up. You just have a little bit more exposure. So that calculation has changed. And perhaps, although it may seem easier to buy the things on the way up,